2, 1, 0 and live.
Yeah, welcome everybody. We want to talk about how to invest, whether to invest in crypto assets, blockchain as a technology, and also upcoming sub-technologies like DeFi, potentially also NFT. So we have a broad range of experts here today. Also for us from the Blockchain Center, it was a surprise because we never before, up until today, had 700 people applying for this. So that's also came to us as a surprise. And this is in times where we are not having a hype yet, right? So in case the hype is getting started, let's see in a couple of months, then we will have even more people watching such panel discussions. So I'm very happy to moderate this. To get started, let's maybe do the typical round and asking everybody here in the room to present himself briefly and also the company he's working at. Who wants to get started? Maybe Frank, would you like to get started presenting yourself? And in WOW, for the audience with Frank, we have a little bit of a background noise, but there is no reason to stop the YouTube recording. Just warning you a little bit.
Okay, very sorry about the background noise. Yeah, my name is Frank Wagner. I'm co-founder and CEO of InVow Group. We are a digital asset manager, and to give you a little bit perspective, so I'm an entrepreneur by nature. InVow is my business number 9, if I'm correct. And I started as a personal investor, so with my own money. And then we started to develop a financial service company out of this. So we are issuing professional, institutional grade financial products in the space. The company is headquartered in Liechtenstein. We have offices in Berlin, Switzerland, and my luck in the UAE. That's the reason for the background and the sunshine on my face. So I'm currently in the UAE.
Excellent. Thanks much. So that's the sun, but it's also sunny here, if I see this correctly, right? Wolfgang, would you like to continue presenting yourself and company?
Yes, with pleasure. I'm Wolfgang Mennel. I'm the head of venture capital at the Blockchain Founders Group. And I had the pleasure of working in private equity and venture capital for about 20 years now. We like with BFG, we like to be the first or second ticket in a startup. So coming in very early with amounts up to $500,000 in the pre-seed and seed round. And I must say I'm quite excited about this space because the last time I've seen so many pitches was the internet time in around 2000. But I must say that the quality has changed much to the better. And lastly, because it's so fitting to our talk today, I read a great quote this morning on Twitter saying that the Russia-Ukraine conflict has now officially replaced NFTs as the topic people love to talk, but don't fully understand.
Yeah, it's a little bit cynical to say this, but it's indeed very, very difficult to get a clear opinion of what's going on. Not too far away, right? 1,500 kilometers from here. It's quite close. Okay, let's proceed with Seamus. Would you like to also present yourself briefly?
Yeah, thanks, Philip. So Seamus Donahue, I'm the VP of Strategic Alliances at Metaco. We're a Swiss-based company, we've been in the market since 2015. We provide the core infrastructure primarily to banks to enable them to securely integrate, store, and manage digital assets, cryptocurrencies, tokenized assets, and otherwise. So really providing the core foundation for a bank's entrance into this market. And my own background is I've been in the startup space the last 10 years. I've been in the crypto space, working in the crypto space since 2017, an exchange prior to Metaco, and I've been personally investing since then and been following it since 2014. And my background part of that was 20 years in banking, running trading businesses and prop desks in most major financial centers.
Yeah, perfect. And we have some questions coming up for you about what's happening in the industry with banks and asset managers these days. I think that's why it's very valuable to have you here, because you might also tell us, what's happening with the current talks you're having with large-scale banks and asset managers and so on. But we come to this later. Okay, perfect. And then finally, we have Felix here. Please also present yourself and the company briefly.
Yes, so thank you for the opportunity to join today. My name is Felix Fernandez. I'm CEO of 2116 Capital. We are a Swiss-based investment advisor, crypto investment advisor, and currently focus on one of our flagship projects, which is a crypto fund of fund, where we scan the crypto universe, fund universe for interesting opportunities. My background is mostly 20 years traditional finance. So I worked most of my professional career for Deutsche Börse Group, so I know the market quite well from an operator perspective and from the exchange participant perspective, and let's say exchange product, derivative space, etc. Since 2016, I moved to Zurich. If you want back into the independence and entrepreneurship world, and started the risk management spin-off with ETH Zurich. And as I said, since January this year, also CEO of 2026.
Perfect. So let's jump directly into the topic. And we have one question for all of you. So how would you invest in the entire blockchain ecosystem right now? Would you invest in Bitcoin? Would you invest in startups, DeFi, NFTs? Would you invest in stock market listed companies? Or because of all the uncertainties from political or also regulatory reasons, would you maybe to choose to not invest it all? I think these days this is also viable to discuss. Who wants to maybe get started? Frank, would you like to again start the round mentioning how and if you would invest right now, and which vehicles, which assets?
Well, before I start, maybe a little disclaimer. As always, there's no financial advice in this talk. Yeah, I can just share out of my own experience. And my own experience was always better to have invested last year than next year. Yeah, so today is definitely better than doing it tomorrow. And yeah, buy the dip. Yeah, and uncertainty, yes, of course. So we are in a new market. I like to compare it to a roller coaster ride. You know, when the roller coaster is going up, everyone is cheering, wow, how cool is that? And when the roller coaster is going down, then fear comes to the ride. But the worst decision you can make during a roller coaster ride is to leave the car. So my experience, I mean, is yes, it's just the right time. And from my personal perspective, being an entrepreneur and investor for a couple of years, it's definitely the biggest entrepreneurial and financial or investment opportunity of my lifetime. Yeah, it's really changing. Just if we see Bitcoin just as a store of value, being the internet of money, the internet of values. It's not only Bitcoin, also the other coins. That's much bigger than everything we have seen so far in the digital space. Yeah, Amazon only changed the way how we buy goods. Google, Facebook only changed the way how we consume media, how we interact, how we communicate. Now we are talking about the digitization of the financial sector, about the Internet of Values. That is so big, and the good thing is that we are in such an early stage of the market. So of course there is fear, but that's the opportunity. That's not the risk. That's the opportunity. So I'm bullish, and the longer I'm invested in this space, the more relaxed I become when the market has some hiccups. Yeah, that's volatility. That's the price we pay on the road to success. So yeah, I'm absolutely optimistic, and I'm investing.
But focusing on tokens, Frank, right? Focusing on tokens.
So in Varo as a digital asset manager, so we see two challenges for the market, especially for the professional institutional investors. So one is liquidity. So tokens are a good instrument in comparison, for example, with the late 90s or early 2000s equity investments into the digital space. You are not blocked. Yeah? If they are exchange traded, you can buy and sell. You can make some extra profits based on your trading strategies. That's one. But especially second is especially the institutional investors. They need financial instruments. Yeah, they are not willing to open their own crypto accounts, going to FTX or whatever, and buying these coins and having a private key. So it's also about storage, it's about custody, it's about financial products. That's where my passion is, institutional grade financial products. We are building them, and that's what the market is waiting for a long time.
Okay, excellent. What about you, Seamus? You talking to banks, asset managers, and so on. What's your condensed opinion right now? Would you buy assets, and if so, which one, or would you not do it?
Well, I think it all depends on your time horizon. I think I agree with Frank, big picture. I'm very bullish in the space. The reason I work in the space is because I was so constructive on it, right? So I'm 100% all in that sense. But I think like in every asset class, there's timing. I think it's what we see in the background is very constructive sort of infrastructure build in the space. Indeed, as you mentioned, we are as a company very much focused on enabling banks and larger FIs to get involved in the space, to deliver, let's say, the on-ramps and off-ramps to their clients. And they come with, an established client base, and it's just really about opening gateways to them. So we are seeing, and I think from that perspective, what we're seeing is extremely bullish. I'd say, a year ago would have been a few jurisdictions. I mean, Germany, obviously, I think was one of the leading ones, Switzerland, Singapore, in terms of the regulators, effectively giving the green light to their banks to be able to build. And although there's still regulatory uncertainty in some jurisdictions, I think places like the US, now there's pretty much certainty that the asset class is not going away. You've got the presidential working group looking at stable coins, and there's a discussion about how it gets regulated, but the point is it's going to be regulated. It's here to stay. So I think we're seeing even the largest US banks building the space. And every day you get another announcement of another firm. I mean, BlackRock announced a week ago, right? It doesn't get much bigger than that. So I think that is extremely bullish background longer term. If it's going to be as easy as trading, Microsoft shares to be able to trade, whatever crypto, I think that provides a floor and provides access to the market. Now, bigger picture, what I buy right now, I'm a little more cautious. I mean, I think about crypto overall was born out of let's say the experiments we saw from monetary policy in 2008, quantitative easing, been through a couple of rounds of it. We now at a stage where quantitative easing is shifting potentially to quantitative tightening. There's a lot of geopolitical uncertainty, the rate rises. So I think the backdrop for investing in almost any, let's say, risk asset class is becoming a lot more cautious. And whereas last year you just buy Bitcoin, buy Ethereum, buy the riskiest crypto and go away, at least at the start of the year last year, so 2020 into 2021, I think now it's much more difficult to just say I want to be long. I think it's much more of a micro market. You have the specific project. It's not just being long the let's say the broad indices of the market. I think you need to pick and choose, and you need to be much more careful where you're investing now. But if you have a 10-year horizon, I 100% agree. If you're investing for this year, cash has been a pretty good place to be of late. Let's say.
Interesting point. Let me ask one follow-up on question. What about the US? They apparently will this week release some guidance, roughly, on how they might regulate the crypto asset ecosystem in the future. Do you have any expectation what's going on here, or what will happen maybe this week, right?
Yeah, I mean, I think given what we're seeing with some of the discussions, I think the broad trend is to really push this into banking regulation. So I think from that perspective, I think the established players we see now increasingly need to become some sort of regulated bank. And we see some of the the big participants, the crypto native firms, applying for banking licenses. And I think the same reason we see the banks move is because they have comfort that this asset is something they'll be allowed to trade. So I think that's the broad direction. Of specifics, I don't know, but I think that's the general point. I think regulation is part of this business now. The Wild West, I think, is over. I mean, we've been in this space since 2017, 2016. You've seen how it's evolved, where anything goes, to now it's much more of a regulated asset. It's got all the regulated institutions involved. So I think it's just going to be more trend towards defining that.
Okay, interesting. So we see a regulated asset class evolving here to basically trying to summarize this. Okay, and Wolfgang, what's your opinion? How would you invest, if at all, right? And what vehicles?
I mean, I broadly share what Frank and Seamus have been saying about their enthusiasm in this space. I mean, if you look at the various long-term waves, I mean, we've seen the industrial revolution, we've seen the internet, the mobile revolution, now we're in the midst of the crypto revolution. And that usually takes a long time, and the results may be different than people expect. A lot of money will be lost and a lot of money will be made. And that's always when new technologies are being introduced. So that's nothing new. And it needs this pendulum to swing to the other side to bring in the innovation, because if we look at many industries, the degree of digitalization and automation is still very, very low. I mean, we look at banking, for example, banking and insurances, and there are so many manual processes behind the billion-dollar funds that you wonder how is this ever gonna supposed to work. I recently thought about, should I invest more money in cryptocurrencies or in startups? And for me personally, as Frank said, we're not here to give financial advice, just to share our own point of view. I am more bullish about investing in startups than investing in cryptocurrencies. And the reason is, and let's leave Bitcoin aside, but if you look at all the protocols, it's very hard to decide which protocol will be among the winning ones in the future. I mean, if you look at a simple thing like the browsers, we moved from Mosaic to Netscape to Internet Explorer, then came Firefox, then Chrome, now there's Brave, but you would have never thought that Google Chrome would be sort of the king of the hill. So it's very hard to, I find it very hard to bet your money on the one horse that there will be the winning one. If you diversify well in the startup universe, I think that your returns are likely to be very, very nice. Let's put it this way, because the kind of multiples that we see in this space are quite impressive. And I would assume that the same laws of venture capital that applied in the internet space and after apply also to the crypto space, that out of 10, you have maybe 2 very good ones and maybe 2 okays, and the rest will just vanish. But I feel that the crypto space offers multiples that are way higher that we have seen from other investments. And that's because crypto allows you to build a whole ecosystem around your product. And we're currently looking to gaming. And when you look at game and blockchain games, there is much more than just the game. There are whole marketplaces coming up through NFTs and tokens, and it's amazing what can be done and how quickly it can scale. So I'm very bullish on investing in startups, and I'm fully aware of the ups and downs in the market. But look, I mean, the old saying goes, I mean, what's I don't know what the translation is, but when you hear the sound of the cannons, that's the right time to invest. So. Let's hope we are not hearing the sound of the cannons, literally, but you know what I mean. So I'm not afraid of market volatility, because it will just weed out the weak ones and bring out the stronger ones.
Okay, fine. I also come to this later. We also got some questions from the audience, which I will pose here. But to close the round, Felix, what's your opinion? How would you invest? Would you invest right now or not? And what types of vehicles?
Philip, can you hear me?
Yes, very well.
Somehow the meeting is. Hello, Philip?
Yeah, can you hear me?
Yes, I can hear you.
Okay, then please proceed also you for the question.
Okay. Yeah, it was
how invest and so on. Yeah.
Yes, of course. Yeah, so I think a lot of things have been already said here by my colleague panelists about, let's say, the underlying market and the potential of crypto. So I don't want to focus on that. From a, let's say, more in market agnostic perspective or instrument agnostic perspective, I would say that cryptos, when starting with Bitcoin and now looking at the full crypto universe of different kinds of currencies and other instruments, what you can observe is that from a purely, let's say, risk-adjusted perspective, is a very interesting universe. I mean, the typical Sharpe ratios are around about 2 times higher than what you can have in other asset classes, can be even higher than that. So from that perspective, it makes a lot of sense. People are typically concerned about these stark moves in terms of, let's say, high volatility, large drawdowns, and so forth. But what many investors do not understand is that you have to put this into a perspective. So if you, for example, divide the Bitcoin returns and volatility by a factor of 10, you're getting quite an interesting instrument which has similar characteristics like a bond portfolio, a global bond portfolio, but much higher returns and, let's say, much lower volatility in contrast. So how should investors generally invest? Again, without giving any specific advice, but I mean, generally following the concepts that you can see which work in other markets. Let's take the equity markets, where only a handful of investment managers are capable of beating the market. So my recommendation in terms of, let's say not recommendation in terms of investing directly, but recommendation looking at would be, please look at the market. So investing in the market is a good idea. Diversify across the market is a good idea. There are products around how an investor can do that. And this would be, for many investors, probably the right approach. For those investors who have, let's say, higher liquidity, so they can afford, let's say, other instruments, and they have sufficient expertise, of course, then other instruments like venture capital investments, like crypto funds, offer additional dimensions which you're not having necessarily in the market. And these dimensions can be interesting. But again, it depends a little bit on the kind of investor and what your risk appetite is. And last but not least, liquidity is always important. So even if you believe 100% in a specific, let's say, investment, it's always good to diversify not only across risk, but also across liquidity terms.
Okay, so excellent. So you would basically vote for a portfolio's perspective on all this to basically not get biased outputs in case people would focus on one specific set of investment objects and so on. That's an interesting perspective we did not have so far. No, perfect. Okay, and now in case we are trying to make sense of what's going on currently, you are talking to all kinds of people in the entire market, to startups, to asset managers, to banks, to maybe also regulators and so on. Maybe you can share, without mentioning names, of course, maybe you can share some impressions, maybe also anecdotes about what's going on in the markets, who is exploring it, who likes it, who dislikes it, maybe also to Wolfgang to get started. What kind of startups are you talking to? Is this, what kind of token models is it? What kind of, is it the old story about logistics and supply chain management, or is it the new story of gaming and metaverse and so on? So maybe share some views out of the market of what's going on currently. Wolfgang, would you like to get started?
Sure. We're seeing pitch decks from a variety of industries, so it's difficult to really pin down one industry which is special. Obviously, there's lots in DeFi because that is such a huge space, but the market is becoming very crowded. It's a bit like with the neobanks. There is so much money in neobanks. You wonder how the banks are ever going to make money because there aren't enough clients. So the same may be happening in the crypto space with DeFi. And then there is this eternal question. I think James or Frank mentioned it. I mean, more regulation will be coming, that's for sure. The states will not accept that their tax dollars will be taken away through a system that is outside of their normal jurisdiction and taxation. So DeFi is interesting, but we're not that bullish on DeFi only. So what we're seeing a lot is gaming, blockchain games, what I already noticed. Analytics, I mean, there's a lot of talk about Bitcoin or cryptocurrencies being sort of the money of the crime syndicates, but I don't think people at one point will stop saying this, and it will stop being used because the analytics companies like ScoreChain and Chainalysis will become just too big and too advanced, and you will just find every record that has changed hands, like this crazy couple that has been taken into custody a few days ago. We like the application level a lot. So real use cases that build on a blockchain or DLT architecture. That's something we're looking quite closely. And I mentioned insurance and banking as one examples where there's a lot still to do in the asset management space. We recently invested in IoT software provision because that's a huge issue. The more IoT devices there are, the higher the risk is that they might get corrupted. And blockchain offers a pretty good architecture to make sure that there's much more security around that. So it's not just one area. We're really seeing very well architected, very well orchestrated pitch decks and business models these days. That's why we are so bullish. The founders are pretty smart. They're very smart, and they understand more and more how a great token model can be much more than just a product you're trying to sell. And that's something I personally had to come to terms with coming from the internet world, because that's so different, but the opportunities are so much bigger. And that comes full circle again to my earlier statement, why I think that the returns on a diversified blockchain venture capital portfolio have the potential to be much higher than we have seen in the internet world.
Yeah, interesting insights. I think there are some more topics around there which deserve some mentioning for the future. The Bitcoin Lightning Network zum Beispiel could be very interesting in half a year or maybe 1 year, right? Then we have CO2 tokenization for the decarbonized world, which is potentially a good intersection with blockchain. This would come from the startup sector, right? And it's not just NFT and metaverse and DeFi, right? Yeah, what about you, Seamus? You're talking to banks, I guess, asset managers and so on. What do you see there coming?
Well, obviously, I'd say just a caveat, it's obviously a much more conservative set how they're embracing this, basically, right? So it's much smaller incremental steps. But I'd say, the use cases we saw most of them focused on were around on-ramps, off-ramps, as I said, really enabling their clients to buy and hold cryptocurrencies, Bitcoin and Ethereum. We've got one client, BBVA in the market. Basically, they launched a global app to do that, like a Revolut type app, and that's been tremendously successful. So simple use cases are obviously very popular. But I think what we're seeing now emerge now is what's next, basically. And I think they've all been thinking about token use cases, stable coins, particularly things like payment use cases, loyalty. And I think also DeFi is on the horizon. I think the DeFi is troublesome to banks in the sense that, again, it's the pure DeFi is there's no AML, it's a bit Wild West again. But what I think banks, when they look at this space, they can also say they can reinvent their entire sort of, let's say, internal sort of market operations, which is pretty capital intensive. It's all about banks right now who roll around credit intermediation, balance sheet intermediation, and it's an expensive business overall, whether that's people and cost of capital, et cetera. And the protocols, if you look at DeFi protocols, effectively they can replace most of what they do in terms of market functions with them. So I think there's a lot of thinking about what that's going to mean for their future and the banking stack. And as a result, you're also seeing banks invest in the space. The foundation, we're in the custody space and we're seeing all our competitors routinely disappear from the market. MPC has been very sexy, as we saw. Custody in general has been very interesting from an investment perspective. So the banks are looking at this as a core foundation. And I think there's a lot of use cases now they're thinking about, but they're still quite a ways away from production. But I think they're really about investing in the core infrastructure, not just getting a contract. I think is one of the key themes we're seeing in the market.
Yeah, but to summarize, Seamus, you would also clearly agree that basically banks are increasingly dedicating budget to this topic, and it's not just prototypes anymore, right?
Oh no, yeah, we're well past that now. 2 years ago it was POCs in an innovation department that had nothing beyond an experiment. Now everything is about going to production, and I'd say some of them now, or many of them now, particularly places like the US, they feel that they're behind the curve. Their clients are asking for this at a set date. They need to get it done by June, July, whatever the date is. And they're under pressure. It's not a nice to have, it's something they need to have, or they feel they're going to lose the clients. So and there's competitive pressure as well, because one moves and the other has to follow. As you know, the banking sector is very much of that nature. So we're seeing that in multiple jurisdictions now.
Yeah, excellent. Yeah, that's a good summary. And from the side of, let's call it asset managers or maybe family offices or maybe others around the world, Frank, what do you hear from these days when talking to investors?
Yeah, very important stuff was already said. So it's all about diversification. It's about wealth protection, so risk management. We believe in active risk management, and it's about compliance, regulation, institutional grade products. So that's from the structure perspective. But let me bring a little bit more the global perspective into the conversation. Yeah, always when I'm on conferences, I talk to customers, to partners, let's say in Frankfurt or in Zurich. After the meetings, I feel a little bit, let's say, sleepy. Yeah, I have to defend blockchain, and honestly, I cannot do this evermore. So I don't have the time to convince everybody. Believe it or not, invest or not, think what your thoughts were about the internet in the mid 90s or even early 2000s. So did you invest or not? Was it right or was it wrong? So I don't have the time for this. And I think that's one of the biggest disadvantages we have especially in Europe and especially in Germany, that we are such a conservative investment environment. Yeah, we want to protect wealth. We are not investors. We are a fearful society. And here in the UAE, it's completely the opposite. So within, I would say, a little bit more than 1 year, the ecosystem completely changed. They believe in crypto, they believe in blockchain, they invest, and they are not only bullish about Bitcoin and the other coins and token, they also say, hey, it's not that I'm going long on crypto, I'm going short on the existing world order, I'm going short on the existing financial system. I love these bullish statements, yeah? And I think we should be bold, we should think big and make wise investments. If you only want to protect your, excuse my language, if you only want to protect your ass, then you should buy bonds, you should do the usual stuff, but you will not make money. But because you have to beat the inflation rate. And inflation rate is not the 5% we are talking in the news about, yeah? You're talking about asset inflation, let's say 15% or even more. If you want to beat this, then if you take the right action, the right decision to beat this inflation, then you're an investor. Otherwise, well, you're doing your job, and maybe that's good for you, you will earn your euros, but crypto is really for the brave people here. And brave investors, I can see more in other parts of the world than in Europe, honestly.
Yeah, this is partly said because we are also a little bit maturated here. But I think it's an interesting aspect you're bringing about. I think it's 2 points. First of all, this technology is getting increasingly geopolitically relevant, right? How is Russia deciding on Bitcoin? The central bank says, please forbid it, ban it. And the other part of the country, like the Kremlin, says, let's explore it, let's regulate it. And we have the same development going on in Turkey, right? Where the clear message from the country Turkey is also not clear. Will they now ban cryptocurrency or will they regulate it? So
Philip, how can you ban Bitcoin?
No, I know you
can ban fiat gateways. As a government, if you are smart, you should tax it.
You're right, but there is a large government, a large country in the world which did ban Bitcoin, at least, as good as it can. That's China. So you can do it. But actually, to be very honest, I think open democracies around Europe and the US, they cannot ban it. We are too open for this, but China probably can do it. But I wanted to make this point, what you to just repeat it. I think this technology is getting a geopolitical relevance, and I think what you also mentioned is it's getting a visionary relevance for the future, because sometimes we are living for the next week, for the next month, maybe for the next year, but what happens in 2032, that's in 10 years, right? And 2042, that's in 20 years. I will be then 62. Today, actually, I'm having my birthday. I'm getting 42. So in 20 years, I'm getting 62. I'm probably not getting retired by 62, maybe then with 72. But how will this world look like? And that's exactly right. Will the system hold like it is, or will it change significantly? And I'm pretty sure that blockchain technology, especially also the decentralized protocols, will play an interesting role here. But let's not forget Felix. In case you're talking about asset managers, you're sitting in Switzerland right now. We know that Germany is doing a good progress on in the regulatory side. I would guess so, right? But Switzerland is still a little bit ahead of us, at least 1 year, I would say. So what's your impression when talking to people in Switzerland, family offices, asset managers, and so on and so forth?
Yeah, I mean, we basically have 2 areas where we're active, which is Switzerland and Germany. And there is a difference between both. Let's start with Switzerland. On the Swiss side, we see quite a good adoption of crypto into portfolios. We're even seeing that pension funds are starting to incorporate crypto funds into their portfolios. Of course, just small buckets. They are also regulatory not allowed to go deeper into alternative investments, but nevertheless, it's already on a level where institutional investors are considering it. So this, I think from my perspective, is a very good development, very positive development. What we'll see on regulatory front from FINMA is that, yes, they are, let's say, quite interested in the nitty-gritty details. So they want to understand if the asset manager is really capable of managing crypto assets, but they are not prohibitive. So it's rather the opposite. So there is not necessarily extreme support, but it's also not blocking it. It's rather the tendency to regulate it well. And I think that's good. From an investor perspective, as I said initially, we find quite a positive feedback here on the Swiss side. In the German market, it's a little bit different. I mean, from my experience and the talks I had, and also in some presentations, I have, let's say, probably not an exact statistic, but roughly what I sensed, and also from questioning in audiences, how they, what their opinion is, or how they see crypto. So roughly 25%, so 1/4 is already invested. 50% is not yet decided, so they are interested, but haven't ventured into it. And there is roughly, the remaining quarter, which is, definitely not wanting to invest in it and not accepting it or seeing it as probably something which is intrinsically negative. And then all the arguments that you listen to or see many times, be it energy consumption for Bitcoin, be it the term of, let's say, terrorist financing and drug dealer financing and so forth. So there are many arguments which are coming from a narrow perspective. But nevertheless, talking to the different investor groups we are talking to, we are only talking to professional investors, and we can see that on the asset manager front, so family offices and mid-size fund managers, asset managers, interest is extremely high. In some cases, they are already invested, but want to have more solutions on the table which are well risk managed and better risk control. On the institutional side, there is appetite. They are slowly understanding that if they don't offer solutions, their clients will go to other offerings and will move capital away from them. If they will be fast enough to compensate that, I'm not sure. But at least let's say, even larger banks are now considering to launch investment vehicles, either by, let's say, designing themselves or buying into existing ones.
Sorry, interesting aspects coming here from the Swiss market, mentioning that people are very open. I just had this one thought, because when you're talking to German banks and asset managers, you very often hear that they feel that it's spannend. You know, that's a German word, spannend. And spannend does not really mean that people are excited, right? Spannend means that people are somewhat interested, but actually that they are having some issues with understanding what's going on here. That's the meaning. That's the true meaning of feeling something spannend. You know, that's not real excitement. And I also have the feeling that this kind of being interested is basically changing into getting excited. But it takes some more months to come. You know, that's basically my impression currently. But people find it interesting, and they somehow try to dig into all this. But they also have difficulties getting like a clear message on it. That's why we also do these panel discussions to also help with education and getting your as experts here and the message out. We now also have some interesting questions coming from the audience. For example, one question is interesting. It is besides DeFi, NFT, and the metaverse, which is in the media day by day, where do you see big trends going on? We already had a couple of points, you know, digged into all these answers by you, but maybe let's very clearly carve it out. Where do you see 2, 3, 4 big trends besides DeFi, NFT, and metaverse? Who wants to give it a try?
I can
please,
jump in and start. I mean, it's basically on the theme that I was mentioning earlier. It's the digitalization of companies, which is still at the very beginning, and blockchain can do a lot. Or let's call it DLT to cast the net a bit wider, can be of huge significance here. I mean, if you look at the elektronische Wertpapiergesetz, the EWPG, it's a new regulation around the fund system. I mean, all of a sudden, you do not need a central registry like Clearstream, but you can do it on your own. You can basically sort of store your fund part on a blockchain system, on a DLT system. And that can be a huge trigger for substantial change in this area. So it might not sound as sexy as metaverse or NFT, but impact-wise, I believe it could be just as significant. And if I may just add on build on something that you mentioned, Philip, and Felix and Frank and Shamus were on the same theme. It's how far is the market? How much have investors understood? I mean, there was this old saying that when there are ads during Super Bowl halftime, you better get out in the market. And this year there were plenty of crypto ads, and we had the same thing 20 years ago with internet companies. So you would think it's already too late. And when you ask those people who have bought Bitcoin at 50 euros or $50, they think it's far too late. Now, on the other hand, if I look at in the circle of my friends, outside of the professional circle of friends, hardly anyone knows about Bitcoin and crypto. It's completely new. And Felix, you were saying 25% are interested, 50% are undecided. It's yes, I mean, I hear careful, cautious interest, but there is a lot of knowledge is lacking in this area to really understand what this whole thing about. And what I said in the beginning, that NFTs have been replaced as the topic people love to talk about with Ukraine, and they still don't understand it. It's so true. There is a lot happening, but you wonder, am I too late? Am I too early? Or is this the right time? And you can find arguments for all three.
Maybe I can contribute something here regarding education. When I was a consultant back in the late 90s, it was in 1998, I had a consulting agreement with a big distance retailer in Germany. I don't name it now. It's deaf anyway. And they said people will never pay with credit card and buy books online. That's really what they said in 1998. And not talking only about books, all the other stuff. Even books they could not imagine. 1998, that was the year when the internet penetration was on the same level as the Bitcoin adoption today. Exactly. And we are in the same situation. Yeah, the same people are telling us, no, it will never come, it will never happen. So what a luck. We have again the situation from 1998, and we know what will come. 1998, that was the year when Amazon really started. So we are again on this tipping point. And coming back to your question, Philip, the big trends, I would add here that for me NFTs, they are somehow overrated in a way. I believe in NFT, I know what an NFT is. When an NFT comes with utility, it makes absolutely sense, but only overpriced JPEG, it doesn't make any sense to me. That when it comes, then when we are in the same situation like with the tulip bubbles in the 17th century in the Netherlands. Yeah. So NFT, I would say, hey, have a closer look, don't buy everything. And talking about the metaverse, that's bigger than we can imagine now. Just look how on the behavior of the young generation, the gamification of everything, what Corona changed in their life. So metaverse, I'm really bullish about it. I wouldn't say I like it. It's not my lifestyle, but from an investor perspective, I'm really aware about it.
Yeah, I think concerning the metaverse, I would say, I think that we all here, we are maybe a little bit too old to understand the metaverse. We have to ask the students who have the age of 20, 21, they have to explain why the metaverse makes sense. You know, that's my feeling. Or anybody would object this point.
Absolutely. My kids spend, if they could, they would spend all day in Roblox. I mean, it's just, yeah, but it's, I'll just add basically a couple of comments on what Frank said. I mean, I love that thing. It is early. I mean, you still have guys like Paul Krugman, that I don't know why I get so much credit, who said, you know, the internet would never, in 2005, the internet would never now amount to anything more than the fax machine did. So clearly, I think, you know, mainstream commentators, whatever, underestimate the space. to me, one of the things that there needs to be, you're talking about where the next thing's happening. I think one of the things, let's say, that I'd like to see as next thing is not happening is more, the regulation is good that it's coming. It's not coming fast enough, though. I think back to 2008, where we had, all these ICOs, which, surely a lot of scams, but it was also massively exciting in terms of, early stage investment through tokens, right? And I think that a lot of that has gone away, just given all the uncertainty around, the crackdown from regulators, justly so in many cases. But I think that's what's missing now. I've been invested in the early stage space, primarily through the traditional VC space. And that's great if you have a 10-year view, but you try to exit these things, you have to give like a 1-year notice, then you're gated for 6 months, and it's extremely it's easy to get in, it's extremely complicated to get out. So you can have great returns, but it would be fantastic if we have on-chain, more on-chain vehicles to invest in this space. And although I'm I'm in the industry, I live and breathe this every day. It's still incredibly hard to figure out what to invest in, because it's no longer just a handful of protocols. Now you've got thousands of tokens. Thematically, it's changing all the time what to invest in, whether it's DeFi, the metaverse, etc. You want to externalize this investment to professionals, basically. But I think the vehicles still are I think we need more that's on chain, that's native to the blockchain as well to invest in.
Yeah, interesting point. Another follow-up question coming from the audience here. In case you would like to invest in the metaverse, right? How would you do this? Would you purchase the Facebook share out there, now called renamed to Meta? Would you potentially purchase other stocks like Roblox? Seamus, you mentioned it. Would you inspect all the tokens out there? Would you inspect like a metaverse hedge fund? Would you inspect a metaverse index token fund? There are so many tools out there. Or would you simply wait a little bit until things are getting a little bit more clear of what's going on here? Any ideas?
Can I just one sentence? For me,
yes.
By investing into metaverse through Meta stocks or shares, that makes it's for me like the same as buying Walmart in 2000. No, absolutely not.
Yeah, that's interesting what you're mentioning, Frank, because I also thought maybe the all-in of Facebook going into the metaverse might be one of the worst decisions in this company's life, but we will see this, right? Let's see. Anybody else has an opinion about how to invest in the metaverse the best way you can?
Yeah, maybe a dimension which is not immediately visible when you look at these extremes. The metaverse is then a little bit dominated probably, and also the, let's say, information situation dominated, but what large players are doing and who is engaging in that. But probably I would think about what is if you want to fuel, so what is the underlying economy of the metaverse? And I think that here, for example, the mechanics of micropayments, which are, if you want the dimension which adds value and which adds business to a metaverse, is quite important. And initiatives, for example, like Lightning Network, could be a component which is probably not already seen as an interesting dimension, because it falls a little bit into a more boring, let's say, operational mechanic. But the technical opportunity behind it, to make all these, let's say, micropayments and transfer payments across peers and so forth, allow for a completely new dynamic. And I think this could fuel the metaverse. And one dimension of the metaverse is probably a little bit the difficulty to really understand it from the right generation perspective. And I think I can only join my co-speakers here that you have to probably look at the kids or your own kids to understand how such a metaverse is evolving, which is a multitude of different, if you want, universes where, let's say, this next generation and the upcoming generations, it will be far more natural to move within these metaverses than it is for us today, which have maybe seen, let's say, similar attempts, failed attempts in the last 10 or 20 years. But for them, it's something which, having their mobile on for 24 hours a day, if you want, they can log in worldwide into metaverses. I think it will become a completely different and new dimension for our society, and therefore also for an economic dimension.
Yeah, but the infrastructural level of the metaverse could also be all the blockchain layers out there, from Ethereum to Polygon and so on. And I think an interesting tactic would be to identify a metaverse token fund, but not necessarily incorporated as a legal entity, but rather as a smart contract. You know, there are some of them out there. This could be interesting because then you would invest in like an entire breadth of coins. But who knows? I haven't found something like this myself previously. We have another question from the audience. What about, that's very interesting because actually my personal opinion is you could also invest into this technology by shortening Deutsche Bank, right? That has potentially the same effect, except you have inflation going on because then this would not make sense, right? So it's multiple metrics layering upon each other. But what's your opinion about DeFi? Will DeFi be driven by all these protocols we are currently seeing, or will DeFi be adopted by existing large-scale players, or will we see some kind of resistance from large-scale traditional financial institutions? So how will or I can also term it very clearly. How is DeFi coming to the people via the decentralized protocols, via existing banks, legacy banks, and how will this play out in the future? Any ideas?
Yeah, maybe I can.
Go ahead.
Yeah, maybe just on one topic we are currently linked to and working with. I think that one approach will be that we have consolidation layers. So we'll have service providers which consolidate access to this DeFi space and provide the transparency required. I mean, today it's really a nightmare, yeah, to crawl to this DeFi space, to understand the services, understand the risks, understand the offering, and to engage. And you may need then tons of different tools and wallets and so forth. And I think in one, I think quite realistic way is that we will see the emergence of service providers, which will not necessarily be the large bank. I think they will be too slow for that, but which will provide then, if you're on unified and consolidated access to this larger universe, doing a systematic due diligence, doing, let's say, a risk assessment and pre-packaging it into tools and if you want, just interfaces to a broad group of users and investors.
Yeah, I think this is interesting because if you design such a tool, could be an app or whatever, in case you define such a tool in the right way, then you could also rely at least to some degree on self-storage and you do not need all the licenses of a bank, you know, maybe not necessarily for large-scale asset managers, but at least from a retail perspective. Any other opinion how DeFi will reach us through startups, protocols, or the German Sparkassen sector later on? You know, what will happen here?
I don't know which particular bank will embrace it first, but I think the incumbents will have to embrace it. I mean, I think eventually it's existential. I mean, I think the guardrails right now they're regulated, and that's going to be their advantage because this whole space is going to. I mean, DeFi will be regulated. I don't think it'll be, as we were saying earlier, exist as it is. Now, how that looks, I think, is still to be defined. But I think the main point is the banks will still have a role as a safekeeper of your assets, providing compliance functions, effectively the gatekeepers for the governments or the regulators. We've seen that there's a need in that, more not a need, but that'll be a requirement. Look at Canada, how they're leveraging the banks for their own purposes. But I think that's something that's not going away. But I think all the intermediation they provide right now is very expensive. And you look at the PEs of the banks relative to these other new companies in the space. I think investors will actually eventually demand that they reinvent their business models, that they no longer have this capital-intensive intermediation model and look to leverage DeFi protocols, which really can rip out a lot of the core, let's say, capital markets, investment banking side of the bank, and they can focus on bringing clients, providing fee service to clients through DeFi protocols. So I think it's a model that could get much higher returns on capital from, and I think eventually investors and banks will demand that.
Yeah, interesting. Yes, Frank, please.
I think it's very important to look on the time perspective, on the time horizon. So on the short term, most of these DeFi projects, they are niche, they are not compliant, some of them are even illegal, and that's what we see now. But on the long, honestly, they are solving a real existing problem, and whenever there's a better solution than the existing banking system in this case, it will survive. It's a pure Darwinistic approach. On the long, finance will become decentralized. Do the banks like that? No. Do the governments like that? No. So my advice is, in this case, it's really not advice. I don't know if they are listening, but the advice is, hey, embrace it, tax it, avoid the worst thing, buying weapons, buying guns, invest in terrorism, whatever, yeah, but embrace it. It will come anyways.
Yeah, and with this, we are coming to the next question. I think it will also be the last content block for this panel discussion. Some of you guys already mentioned the storage of value function of Bitcoin, and one person in the audience basically demanded to dig a little bit into this by hearing our opinion on the stock-to-flow model of Bitcoin. Maybe to quickly repeat it, the stock-to-flow model says that we have a specific stock of a commodity in the world. For example, with Bitcoin, it's 18.9 million Bitcoins, and then there is an inflow from mining activities, that's 300,000 Bitcoins per year. Then you are computing the ratio. With Bitcoin, that's approximately 60 plus minus. And with the with 60, you basically have a degree of scarcity of this asset. 60 is basically, in case you term it differently, it's basically 1.6%. That's the inflation rate of Bitcoin. And it's very interesting. We should dig into this the next time very deeply, because the euro inflation right now is 5-point-something% in Germany, and it's 10% in Northern Europe, right? And the Bitcoin inflation, denoted in Bitcoin, not in euro, is 1.6%. So last year in autumn, we basically had these two curves crossing, where we saw that previous to autumn, the euro inflation rate was lower than the Bitcoin inflation rate. Yeah, remember it, please, that at that point of time, the euro inflation was plus minus 1%. And after autumn, we had these curves crossing, such that since then, the Bitcoin inflation rate is suddenly lower than the euro inflation rate. Same applies to the US dollar and the Swiss franc and so on. So it's very interesting to measure such things with this stock to flow metric. And therefore, anybody here in the call who want to basically say whether that's a good model, it's a bad model, because it partly is also wrong, because according to this model, the stock to flow model, according to this model, the Bitcoin must have already risen to 150,000 US dollar, which did not happen, right? But from a statistical perspective, the model is still okay. It's just a very unlikely outcome which we are achieving today, right? It's still okay, but it's unlikely. But anybody else wants to give it a stance about what's your opinion of the stock to flow model to measure the scarcity of commodities, currencies, and other assets? Any idea? Maybe Frank?
Yeah, just very briefly. There are many models, by the way. It's not only the stock to flow model. And just for me, the very basic fundamental is that you cannot print Bitcoin. You can print dollars, you can print euros. And we tend to overestimate the impact of these models, including the stock to flow model, on the short term. But we also tend to underestimate the impact on the long term. So my recommendation here is stay calm. Every 10 minutes, another block. It will come.
Yeah, I think it's a nice summary. Every 10 minutes, Bitcoin produces a new block. Even when we now talked here, Bitcoin most probably has produced 6 or 7 blocks, depending on how you measure it. And then the last question, I think this is urgent to note. One person from the audience said that he or she would also recommend to consider ESG issues, combining things like returns and just financial metrics is one important thing. The other point is what about ESG related topics? And then, of course, we are immediately with the proof of work discussion of Bitcoin. But I think the key point is here, right? When investing, I think it's also important to care about ESG topics, because they will be also changing the market, changing valuations, for example, in the area of CO2 tokenizations. Any last word from you here in the room on the ESG topic? One last remark.
Well, we are seeing companies that address this and help funds to pick out the right level of ESG monitoring and unlisted companies. So there's obviously a lot happening here. As far as proof of work and energy consumption is concerned, it's not always Bitcoin we're talking about. So all the other protocols, they're far more energy efficient. So I think the discussion needs to be sorted in a way that we are talking about the right thing. Because when people hear blockchain, they immediately think about coal coal mining, and dirty energy, but that's just not true. I mean, it's one part, yes, but there's a large part which is very energy efficient.
Yeah, I think we will discuss the Bitcoin energy footprint again and again in the next panel discussions. But one remark maybe, and also to close this panel, in case we are using like a standard kilowatt hour in Germany, by watching this video right now, then 50% of this kilowatt hour is green and 50% is coming from fossil fuels. So it's 50-50, and it's exactly the same footprint like with the Bitcoin network. So in case people are complaining, then they should also think about maybe switching off to save electricity, maybe to also stop watching Netflix, to also stop computer games and so on, because the electricity we are burning right now, because it's coming out of the plug in the wall, is exactly as dirty as the Bitcoin network on average. Just very briefly mentioning this, but we have to dig into this more deeply again, because it's a topic which gains definitely more importance. Yeah, any last word by one of you? Otherwise, we close this session for today. Any last word? Okay, then
just happy birthday. Enjoy the rest of the day.
Yeah, happy birthday, exactly.
That's nice. Yeah, exactly. That's very nice. Okay, perfect. Then let's do such a session again in 1, 2, 3, 4 months, and let's see how this developed. And thanks much to everybody for being here. Thanks. Goodbye.
Thank you.
Thank you.
Thanks very much. Bye.
Thank you. Goodbye.
Thanks.
Bye.